Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's video, we've welcomed back the dynamic duo from DMG Blockchain Solutions to walk us through their Q1 2024 earnings. We've got a lot to talk about in today's video, but before we do, please take a second, hit the like button, you guys. It's a big help to myself, Anthony, and the channel. It helps get this content to other people like yourself who may find value, and it's 100% free to do. If you're not already subscribed, McNallie Money, feel free to join. And let me know in the comment section below if you're currently holding shares of DMG, what you thought about their quarterly results, and your outlook for 2024. Now with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, we've welcomed back the CEO Sheldon Bennett and the COO Stephen Eliscu from DMG Blockchain Solutions. Hot off the press today, or I guess yesterday, they just came out with Q1 earnings from 2024. This is shaping up to be quite an exciting year for the Bitcoin space as a whole, and DMG is really no exception. So guys, thanks so much for being back here, and looking forward to getting into tonight's convo.
Thanks for inviting us back.
Right, thank you.
Yeah, you're always welcome. So I know it's been a little time since you were on the program last. So let's start off with just a quick high-level summary of what DMG blockchain is all about, maybe your current operations, and just a high-level summary.
Sure. I mean, DMG Blockchain Solutions, we are a TSX Venture listed company. We actually came out a day ago with a press release that we are in the top 50 TSX Venture companies. So we won an award. Second place in technology. This is the second time we've won that. We won that 2 years ago as well. So that's a great achievement for a small company like ourselves to be recognized in the top 50 companies on the TSX Venture Exchange. We started the company back in 2018 as a public company. Previous to that, in 2016, we were a private company operating out of your area, out of Alberta, out of Edmonton. Before we moved all of our operations to a small town in BC in the Kootenays called Christina Lake. In Christina Lake, we own 33 acres. We built our own private substation of 85 megawatts. On our acreage, we have a 30,000 square foot building, which houses the majority of our fleet. Recently, we announced that we're expanding our footage outside into containers. And so we're going to be doubling our capacity from 1 exahash to 2 exahash in Christina Lake, with our eyes on 3 exahash, hopefully during this calendar year. But we're not going to promise that yet, as we are busy with receipt of new equipment coming in from Bitmain, as well as converting our fleet over to immersion cooling in our building. DMG is sort of two companies in one. We started a strategy a long time ago called Core and Core Plus. Core is all about our hash rate and building our hash rate and trying to run a very economic hash rate with low cost and a high return on our investment. Core Plus is the software side of our business. And the reason we have a software side of our business is we kind of looked at our core business of creating a Bitcoin, whereby we create this Bitcoin once, we sell it to pay some bills, we keep it in our hodl, hoping the value goes up, but eventually we will sell it. And we're kind of sort of done with Bitcoin after we've created it through our hashing. Core Plus is everything after we've created a Bitcoin. And so it's really focusing on transacting in Bitcoin and continually getting transactional fees out of Bitcoin. We've made some great improvements in our Core Plus offerings. We had a great announcement about a new company that we formed in Core Plus that came out this morning as well, which hopefully we'll get into. And then, outside of those two main areas, DMG is invested in a few other companies that are all pivotal to our overall strategy of growing our stock price and growing our investor base and just generally trying to move our company up in a very responsible manner. We're very much interested in regulation. You'll see that through the Core Plus products we have. As well as we're very green focused. We're all on renewable energy. As well, we own the only renewable energy pool called TerraPool. I'll stop. And even has some comments.
Yeah, and one way to think about how it all fits together is at the base, we have our core strategy, we have Bitcoin mining. Above that, we have our software Core Plus. We first have software infrastructure. So we have our pool, we have mine management software for both observability as well as being able to control mining fleets. And on top of that, we have a layer of applications such as the trust, our relationship with Bosonic Exchange, and also our Explorer and Wallet Score products. So it all ties together. And one of the things that's unique in terms of being able to enable transactions to be processed utilizing renewable or carbon neutral energy is our technology called Petra. And this is about being able to have transactions go through our pool, Terra Pool, and be able to ensure for financial institutions that want the option to be able to send Bitcoin without adding carbon, they can do so in working with DMG. And with all the pieces, with a trust, with a relationship, with an investment and a partner as an exchange, and the ability to have those transactions go through our pool, and a base Bitcoin mining that allows us to be able to develop and support this, we are able to do things in a unique way that other companies aren't able to do. So for us, this is really a really exciting time. As we talked about on our earnings call, we felt that the trust piece, having control over a qualified custodial wallet solution was really key. And there's two pieces to that. First is that Canada only has one qualified custodian right now for digital assets. The market is underserved. And the other thing is being able to have financial institutions to give them this choice to send transactions through Terra Pool. Having that piece is the enabler such that they can do that. We described on our earnings call, we looked at the problem, we tried various ways of solving that problem, and the only way for us to ultimately was to take control and to create a company to do that.
Yeah, it's an excellent summary. There's so many facets of this organization. You guys have weaved quite an intricate web, and it does all go together quite nicely under that overall strategy. So I appreciate the breakdown. I always love chatting with DMG because you guys are located so close to my hometown here. And Christina Lake, Anthony says he's coming to Canada this year, and we're going to drive out there in my new monster truck, boys, and we'll check out the facility. So great intro. Now moving along to the Q1 earnings, let's get into some of the highlights there. I realize you guys just did your earnings call as well, so feel free to take a listen for anyone that's watching. But what were some of the highlights or key things that people should be watching for?
Yeah, there's quite a few highlights in the earnings call. I think there is a link on our website so people can go and listen to the audio recording. So feel free to do that. People can also ask us questions through our form that goes to our investor relations, and eventually they come to Stephen and I for some answers. So feel free to follow up on any questions. But I think one of the bigger highlights is that we had a positive quarter, $7 million, around $7 million in a profitable quarter. Not seen since, I think it was 2002, the last time we had one of those. So, from a financial reporting point of view, there aren't that many Bitcoin mining companies that actually are posting a profitable quarter, let alone a profitable year. So that was a big thing for us, being able to show our investors that our strategy is paying off, our way of buying equipment is paying off. I would call it our patience. A lot of investors don't have a lot of patience. Our patience is paying off. And I think that, we're hoping that we can continue more quarters like that. This is a very tough business when you look at what's happening with the upcoming halving, when you look at the constraints on equipment that we've gone through, and you just kind of look at the fact that, our cost to produce a Bitcoin is going to effectively double, and we don't know where the price is going to go. So, for Bitcoin miners right now, it's a tough time to make decisions. And I think for us to come out and have a positive quarter like this kind of shows, how much focus we've had on controlling cost. And sometimes, the decision not to do something has turned out to be a very good decision for us, because there's so many things you could do that may or may not turn out, but sometimes not doing something is actually a great decision. We've looked at a few projects that we're like, oh, we should do this, or we should do that, or we should buy this, or we should buy that, or we should merge with this, and not doing that's probably turned out for the better for us. Stephen knows our numbers. I mean, I love having Stephen on with us because he likes to go through the fine detail of our numbers. And on our earnings call, for anybody that's not listened to one, it's broken into two parts. It's usually me talking about the quarter from sort of a strategy, operational point of view. And then Stephen goes through all the numbers, and he does a great job at that. And then I kind of do the Q&A with Stephen for questions we get. So, you know, if you want to get more into the numbers, and I'll let Stephen rattle off a few of the good numbers we've had, maybe he'll talk a little bit more in detail about the hash rate issues that, you know, we're going to face with the halving, as well as everyone else. But maybe I'll pop over to Stephen and let him say a few words.
Yeah, I think one of the exciting things is about cash generation and generating cash from operations, 3.7 million, 3.2 million of what other people call EBITDA. We just describe it as essentially our operating profit less depreciation, amortization, and stock-based comp. It's 33% margin. That is the best it's been in quite a number of quarters. Sheldon referred back to 2022. That's been a long time. And we were really proud of what we've been able to accomplish. We ended our hash rate ended just under an exahash. We gave guidance for that. We more or less achieved that. And as we look forward, continue to make incremental improvements with our operation. Plus, we have a T21 fleet, which we've talked about because we're on a mining forum. We could talk more specifics about the T21. And one of the things we liked about T21 miner from Bitmain is it offers what they call a high energy mode. And it's the first time Bitmain has actually supported a miner that, from a warranty and everything else point of view, where they specify an overclocking mode. And by overclocking, the miner can get, instead of the nominal 190 terahash, up to 233 terahash. And the power consumption, of course, jumps. And we're essentially building our infrastructure to accommodate that. And so the miner will run over 5 kilowatts in that mode at 22 joules a terahash. And one of the things we've talked about is getting the entire fleet under 25. Having a good chunk, approximately half of our hash rate at 22, certainly gets us a good way there. And because it's Bitmain's first miner running in this high energy mode, it's still to be proved that it can run that way reliably. The fallback, of course, is to run it in its standard energy mode at 19 joules a terahash, and still a respectable 190 terahash. So we're laying out our infrastructure for high energy mode. Hopefully it'll go well. So that would get us what we're excited about for $12.1 million. To get a little over an exahash translates to about $11.50 a terahash. And we think that is incredibly capital efficient way of deploying. All the other infrastructure around it, the containers and all the electrical distribution, we've done a really good job as well in terms of sourcing. We do all the sourcing ourselves. We've done a lot of work to really get the costs of all of the infrastructure down. It also just kind of we think this is leading the way to how mining is going to be going forward. We talked about how miners, we think in terms of infrastructure, 3-phase power, 5 kilowatts and up. This is kind of the future of where mining will be, whether it's in immersion or in air. And we want to be at the forefront of that. And we think just as we think about what we're going to deploy for immersion cooling, we think it will likely end up being something like a T21, but optimized for immersion.
Gotcha.
And hopefully under 20 joules a terahash as well.
For sure. We've seen a number of companies come out and opt for the T21 over the S21 for that overclocking benefit and that warranty protection. So that's great to see that you guys are on that train of thought as well. I wanted to actually ask a question about your fleet upgrade plans and fleet efficiency. So maybe I'll just throw that in right now. It sounds like your goal is sub 25 joules per terahash in terms of efficiency and 3 exahash by calendar year end or fiscal year end. Is that what we're hearing?
We haven't specified the time frame, but when we would deploy immersion with sub 20 joule per terahash miners for 24 megawatts, that would be in excess of 1.2 exahash. As somebody who's been worked as an equity research analyst in the past, I'm always very hesitant to give guidance. So we're not giving specific guidance. We're just saying what we would hope. Sheldon was referring to the end of the calendar year. So Sheldon, you wanted to continue?
I mean, this is something that we're trying to say it's possible to get that out of our existing infrastructure. So it's not that we've got an order on the books with somebody, a manufacturer, but adding in the immersion, bringing in the higher efficiency miners, it's possible for us to get there. As we said on our earnings call, we haven't bought those additional miners, but we see a path to be able to do that. And we need to figure out some of the details of that path, but just knowing that it's something we can achieve, that could be done, potentially this year. We are watching the market. We're hearing rumors of more manufacturers coming out with immersion-ready miners. There right now aren't many manufacturers that have immersion-ready miners. So if a few more come out and there's a bit more choice, different models, different pricing, that could help us accelerate our ideas of purchasing immersion-ready miners versus retrofitting air-cooled, which we do not like doing, but we know how to do it and we will do it. So we haven't given any guidance on when, but it's possible for us to do that.
Perfect.
And also remember post-halvening, we talked about on the call about that our hash rate would drop when we go to low power mode. And for some of our legacy fleet, so S19J Pros can get, call it 24 joules terahash. Pro Pluses can get in the neighborhood of 22. So if you kind of look at that, our immersion fleet running legacy miners will probably still run those not at their nominal spec because we really want to prove out the immersion. We're saying that on the call. But when you combine 22 joule a terahash T21s, J Pros, J Pro Pluses under 25, and then some J Pros and immersion at above 25, it's fairly straightforward to get that number below 25. And we said we are targeting below that. So you should assume it's a number that starts with 2 but does not end in 5.
Yeah. We have a number of XPs as well in our...
Yeah, I'm sorry. And the XPs, of course. Those we'll continue to run those at 21.5.
Perfect. Yeah, I appreciate the clarification there, you guys. And we're always prying. We're always prying for information. So as much as you can give us, that's great. Now, moving along here, we had a couple questions from the subscriber base and in our Patreon groups. Overall, general consensus was phenomenal quarter. We monitor the chatter pretty closely and everyone was pretty positive. But we did have 3 specific questions that came up. So I'll read them out here, you guys. Mining pool revenue. So obviously DMG is very well known in the mining pool world. Revenue for the 3 months came in for a net loss just north of $1 million. Can you give us a little bit of detail there?
Yeah, I mean, we went over this in the call as well. Mining pools are a very fickle business. So at the end of the day, you can pay full pay per share to your users, which means they have a guaranteed revenue by the hash rate they put in. But the actual pool has to win the blocks. And if it doesn't win, and they don't win them in perfect uniformity. It's not like you get a block every two days or every 4 hours or whatever. it's still a mathematical equation that you're competing with other pools against. So, when sometimes we win more blocks in a month than we expect. Sometimes we win less. Overall, over a long enough period of time, it should equal out to be zero. I mean, you should get as many as you're expecting to get. That's sort of how the math works. In general, when we look at our pool performance, we look at other pools that we've mined on in the past. We keep hash rate in different places to understand what's going on with the competitors. Our math is showing that we're winning enough blocks where we should be. But on a month-over-month basis, we did have a shortfall, and you can see that shortfall in our disclosure. No reason we won't have a gain 1 month and bring it back to zero or get close to zero.
Yeah. Okay. Makes sense. So just kind of the, or I guess revision towards the mean, eh? There's some months where you'll benefit. There's some months where maybe you come up a little short due to the probability factor of the pools, you're saying.
Yeah. I don't think that, there's a whole lot of other miners that have a pool that would be reporting like we do, where you're kind of seeing the back end of running a pool. It's not as common. There are some other miners that self-mine that don't allow others in, but in general, there aren't a lot of miners out there that are public and have a pool that you would get the back end information, what's happening in the pool, instead of just the front end, what the pool is operating at.
Sure. Yeah, makes sense. And completely understandable. Next one, subsequent to quarter end, the company announced a commitment of about $3.5 million to establish an Alberta independent digital asset custody solution for institutional clients. So obviously this is a pretty exciting step for the organization. What is this one all about?
Yeah, this is a culmination of many events that have happened over the last few years. Stephen and I and the company in general have been trying to figure out how to bring the benefits of TerraPool, the benefits of carbon-free movement of crypto, the benefits of building custom blocks, which we've talked about with our ordinals in the past, how we can build these large ordinals into our blocks. And we believed initially that it would be quite easy just to go to exchanges and institutions and say, hey, start doing this, start working with us. We've got this great tech, this great way to do this. This is going to be good for you, good for us, good for the industry to be able to show that, we can decarbonize transactions. The reality is, you're fighting technology that's already in institutions, and trying to get it to change is hard. If not impossible. It's kind of like trying to tell your bank to change to suit your needs. Well, they don't do that, right? So we ended up trying different things, but at the end, we kind of broke it into a couple of key parts, and one was opening a custody company for a number of reasons, but for our own needs and what we want to do with clean coins and renewable energy and carbon-free transactions. Custody companies can talk to exchanges and institutions and work with their technology stack to move coins around, whereas pools don't really do that. And so it's hard for us to say, hey, move your transactions between client A and client B to our pool and do them carbon-free. They don't really look at it that way. They have a bunch of wallets that are managed by a wallet infrastructure that's at a custody level, and that custody has to kind of work with you. So custodies can talk to custodies and move things around a lot easier than institutions can talk to a pool. And so through that process, we tried different ways of doing it without creating our own trust. But at the end of the day, it was much easier for us to do two things. So one, as we announced, start our own trust. Two, to bring on a tech stack that is widely used across all the different exchanges and institutions that work in digital assets. And putting those two together and integrating TerraPool into it as part of that, we believe will be quite successful. And so that we've really gone down this path of starting a trust to, one, like I say, enable the use of Petra and TerraPool for clean energy transfers of coins. But two, when you just look at trust in Canada, there's only one. and you look at the market and how it's growing, and you look at how many digital assets there are now and how, the growth of that, you look at the ETFs in Canada, the new ones in the US, and just kind of look at this market, and you go, holy smokes, like there's only one in Canada that has the whole market, that, it's underserviced. There's room for another. When, we started discussing this concept with Alberta Treasury, and we told them the things that we could do, that we have, the ability to build blocks that are OFAC compliant, that these blocks are, carbon free or carbon neutral, that we can customize the transactions and take transactions just from, one to another. So it could be a named bank to named bank in Canada, and build blocks just of that and nothing else. They were in shock of what we had for technology and the ability to do this. They didn't understand a lot of the inner guts of how Bitcoin moved around, how block templates work, how, the energies around it, how hashing works. And why would they? I mean, that's not really their world. But when we got into the details of what we were trying to build, I think we got them quite excited about us getting our full trust license, because it's really quite a unique way that we can work in the Bitcoin ecosystem, the digital asset ecosystem, with an offering that nobody else has. I mean, other trusts and organizations don't have mining pools. They don't have hash rate. They don't have the technology stack like we have. I'm sure Steve will have comments to add.
Well, it's just we're really excited to have brought on Lawrence, who not only has brought a team, but he has a vision way beyond what Sheldon and I could have imagined. For us, yeah, we want the custodian. Yeah, we want it Petra enabled, so it could send transactions through TerraPool. That's all goodness. But beyond that, as Sheldon mentioned, enabling the tech stack that's used not just by systemic trust, but by a good chunk of the industry. So that's really exciting for us, is now having something that's just a lot more proliferated. So we're really excited about that. But longer term, it's about not just Bitcoin, but digital assets. And really, custodians they're not just holding Bitcoin. It could be any type of digital asset. And Lawrence has an amazing vision that we're just trying to say, okay, one thing at a time. And it's just so great to see his energy and what is possible, that it's really opened up our eyes. So Lawrence has not only brought enablement for what we think is the entire ecosystem to be able to have Petra, but to think about custody way beyond just Bitcoin or Ethereum. So that's, for us, such a huge win. And we're really, I think for the DMG story now really becomes a lot more exciting. The whole Core Plus, just we've talked about a lot of things, and we couldn't talk about these things even bringing on Lawrence. Even as we wanted to, we had to wait until the things were more ready. But when we brought on Lawrence, we already knew what needed to be done. Lawrence ran with what we wanted to do and has built a vision way beyond what we could have imagined.
Yeah. Just to add to that, I mean, at some point in time, we'd love to bring Lawrence on just to talk about the trust, just with him. But before that, just for you that don't know who Lawrence Trong is, 25 years in sort of securities regulation. Previous to us, he used to be the CEO of Binance here in Canada on their trust and exchange side. And so, he has a really good idea of the whole world of financial transactions when it comes to digital assets. Obviously, Binance, even with its issues with Binance International and the US government, it's still probably 65% of the world's liquidity in digital assets. And so, having worked with that team, having the understanding globally of how digital assets move around, how they're custodied, how liquidity works, he's got a wealth of knowledge. And this is what Steve and I were saying, is like, he's kind of running off at all these things that, we're a Bitcoin miner that does some technology on the, a tech stack on top of Bitcoin. And he's in the world of financial transactions and, the stuff he's talking about with, stable coins and collateralized debt and all sorts of things. We're just like, slow down, one thing at a time. Lawrence, let's walk before we run.
Just chomping at the bit, eh? No, that's phenomenal and obviously a very exciting space. Definitely a unique differentiator for DMG. And I really enjoyed talking to you guys because you are really at the forefront of a lot of this technology. And honestly, I don't understand this stuff, the inner workings and the guts of these transactions as well as I could. So I would welcome Lawrence on at any time to kind of give us some details there. And I'm sure the rest of the audience would enjoy that as well. Now, moving along, you guys, I know you just recently indicated you're using some of your Bitcoin as collateral for a $9 million US agreement with Sygnum Bank. What can we expect to see in terms of other options that you guys may be considering to kind of finance growth and fund operations in 2024 here?
That's a great question. We kind of talked about this today as well. Of that approximate 9 million we have that we can access with Sygnum. We've taken 5.6 of it so far, so we do actually have some room in there. We still have some obligation to Bitmain for the second half of our order of T21. So, we will probably end up taking the full 9 million on that agreement. The outstanding balance most likely will fund with our own cash. We've had a lot of thoughts about converting that into a longer-term financing, sort of, conventional loan. Been looking at the interest rates, the timing around it. I don't know if we're quite ready to do that. We really want to see what's going to happen at the halving and what's going to happen with Bitcoin price. So we're not quite sure where we're going to go, but we have been quite open that, our goal is to take on debt. We would go into using equity as a way of raising money if we thought it was going to be affordable from a capital point of view versus other options. So we haven't really ruled it out, but so far we've been doing what we've been saying, which is we're going to focus on debt first. One thing that our shareholders are aware of, and any shareholder of a crypto mining company is aware of, is that it's expensive to build capacity. And so that's just the nature of the beast of the game we're in. We did announce that we have made progress on a second site in Canada. Those cost money. So we're not sure exactly what we can do on the cash front. We do sit on a lot of Bitcoin or, a cash equivalent to Bitcoin right now. So we're trying to manage all of that in a way that really makes sense to our investors. And, we want to conserve Bitcoin or our cash, so we always have a cash runway. There is going to be a period of, I don't know how many months at the halving where, people may be running at a loss as they try and, rejig their equipment, change power mode, do whatever they need to do. If Bitcoin price doesn't appreciate to a level where it's profitable, keep running your machine. So we've seen that in a few halvings. Stephen and I are not strangers to that. We have our strategies for that, but we've laid out. But, we've learned that having enough cash in the bank for some of the harder times is very important. So we're really cognizant of cash management, using debt, but, we don't want to get into a debt situation that some of our friends got into a few years ago, or not even quite that long ago, where their debt obligations were so big that they just couldn't make it. And we saw some bankruptcies and restructurings from that. So, controlling that amount of debt you take and when you take it, the terms of it are really important to us. And again, this is kind of one of those things where sometimes saying no is a good idea because you can live for another day and regroup and hone your strategy into something that won't get you in trouble longer term or shorter term, depending on how you structure things.
Yeah, and we're proud of just how we've managed through the downturn, able to purchase new miners ahead of the halving at a really attractive price. So that overall has been good. We're not afraid to raise equity. We've But I think we've pounded the table to say shareholder dilution is something we want to avoid. I mean, ultimately, it's about getting return on your assets, generating cash. As I mentioned, we generated $3.7 million of cash flow from operations last quarter. That ultimately is the way we want to fund our business. But to be able to get to the kind of growth that we need and to be able to be successful with all the initiatives that we have on the table, we're going to have to continue to raise funds. And so we've laid out the options, and we're saying we're going to be as careful and as prudent as possible as to how we proceed with that.
Sure. Yeah, ultimately, there's only so many levers at your disposal. And like you said, Sheldon, in this industry, it's expensive. And if you're not growing, you're kind of dying, right? So you've got to keep up with the pace. But appreciate the discussion there. Now, final question. We've done a pretty good job of talking about fleet upgrade plans, key differentiators here. So I think we can kind of zoom out a little bit to a more macro view. In your guys' opinion, are we going to see accelerated M&A going into the halvening here? Or are we going to see maybe a little bit later as some of these companies start to realize maybe the economics aren't there, they're not able to get the power modes where they thought they could? Is it going to be a little bit more delayed?
That's a great question. M&A is happening out there. Maybe not as successful in the public eye. If you're like us or any other public company, there's a barrage of private companies trying to sell their operations. I think every CEO I talk to we're all inundated with offers, and I understand why. I mean, the halving's coming. People may have older fleets. They don't have the cash to upgrade them, and being bought up by a larger player with cash reserves that can move their asset forward and help their private shareholders is a great thing. And we look at those as we get them, but when we look at these things, there's still this concept that, when you look at buying a company that's already operating, and you look at, say it's got an exahash and they want X dollars for the company, and you go, well, we just bought an exahash for 12.1 million. And it gets really hard to buy a company that has an exahash for 40 million. So, and people have that, equity, whether it's sweat equity or equipment or whatever in their business, and, they want to get a return for it. Their shareholders want to get a return for it. But we look at it from our shareholders' point of view and say, well, why would we pay $40 million for an exahash from somebody else when we can buy one for 12? Now, if you don't have a location, then yeah, you can add some on because you'd have to put the infrastructure in anyways. But still, some of the expectations people have are a bit high. They're trying to sort of sell, megawatts in the future you could get if you invested money and built everything. They're trying to sell that Bitcoin will be worth more in the future, so you should buy it now, but we want you to pay a premium for it. And it's like, so there's a lot of that happening. It is really hard to do M&A from my point of view in crypto, crypto companies do that with each other. There are just so many clashing ideas of how to run a crypto company. It's really tough to do. The only one that's really large that I've seen and you guys have seen is Hut 8. And that took a long time. We'll see what the verdict is on how successful that is. I don't know. I mean, I know the new CEO. I knew the last one. I knew the one before that. And people know who I am. They know what I was doing before Hut 8 existed. So, I mean, it's tough. Valuations are the toughest part in all of this. And just, I wish it was easy, but it's not. And I think a lot of people believe there should be a lot more M&A. I just don't think it's that easy to do with so many options and such a variety of different things that you could be doing with your capital to build your business.
Yeah, I mean,
you may have other comments.
The typical rationale for M&A is to create some type of revenue or cost synergies. And when you combine, if Sheldon said it exactly right, it's like we could build an exahash for 12 million, plus some incremental infrastructure versus 40 million for somebody who's being shopped around. It's like, there's no comparison. So clearly the idea of going out and trying to combine with somebody else doesn't make a whole lot of sense. I mean, areas for M&A for us would be something more synergistic related to the Core Plus strategy. But right now, we don't have anything on the table. We haven't, this is not an active area. Systemic and Lawrence is keeping us busy enough and just trying to run a Bitcoin mining company lean as it should be.
Yeah, and as we said, sort of an investment return point of view, we went out and found another location. We waited a long time to get the approvals for that location to meet what we were really shopping for. So we wish we would have gotten this new location in Canada sooner, but I think good things come to those who are willing to wait. And we hopefully can get more information out once the definitive agreement's done. But it's a lot easier for us to be doing these things whereby, finding our own versus people presenting what they built and trying to get, quite a strong margin on what they built is, it's tough for us to be able to understand those valuations.
Yeah, it makes perfect sense. Why buy used when you can get new cheaper, right? Pretty logical business thinking, and glad that you guys are being prudent and considering the shareholder equity when making those decisions. But great discussion today, you guys. I really appreciate it. As mentioned, I learn a lot when you both come on here. I'll kick it back to you for any closing thoughts, but appreciate the time and looking forward to seeing what kind of comments we get on this one.
Yeah, I think there was one last question that you and Anthony were debating on a different chat you had about cold weather and miner efficiency.
You're right. So the question was, and we wanted to ask you guys, obviously we've talked about hot weather impacts to the mining operations. What are the cold weather impacts? Is it beneficial if you can actually mitigate the snow and ice and all the rest?
I mean, cold weather is great because, the chips need to be cooled. But there were a couple things, and I remember watching this a little while where you and Anthony were kind of going back and forth about hot and cold, and I think there were kind of two things on my mind when I was watching that. One was that some of the products, like some of the Bitmain products, don't like to start when they're cold. So if you have to curtail and restart, it can be hard to get them up and running again. When they're really cold, they just don't want to fire up and operate again. So that can be a potential problem. Once they're running, they're fine. The other thing that a lot of people don't realize in the facilities, we keep ours really cold throughout the winter. But network switches aren't made to go up below zero. And so one of the problems you have is that, when you're minus 15 outside, your network switches can freeze up. And so we've had to create these areas where hot air from our machines are actually venting onto our network switches so they don't freeze up and stop working. So they're definitely minus 15 is great for the miners when they're running. Obviously, you don't want them to go off, but you need to make sure that some of the other equipment can run at such cold temperatures.
See, this is why we need to come do the facility tour. We'll come do one in winter, and then we'll come in summer, and we can see the compare and contrast. No, thank you for bringing that up. Great memory, and that was a question that we were scratching our heads about.
Hey, you're welcome.
Okay, guys, appreciate it. If you're still watching the video at this point, leave a comment in the section below, specifically if you're holding shares of DMG, what you thought about Q1. If you're not subscribed to the channel, McNallie Money, feel free to join. You guys, thanks so much for joining us. We'll see you in the next video and talk soon.
Thank you.